Good morning, folks. It's Wednesday, August 14. It's about 9:15 in the morning on the west coast of the United States, which obviously that's where I'm at. Let me share my screen here and we'll get going. In this video, I am going to be looking at the stocks that are involved in the AI bubble. And, it's essentially the Magnificent Seven. They're basically the same set of stocks. But so anyway, that's what we're going to look at in this video. And of course, one of the questions about the AI bubble is it bursting or did it already burst? And so that's what we'll be talking about in this video. In this slide, this is how I see the evolution of the AI bubble. And in my opinion, it's 90% hype. Maybe it's only 70%, but basically AI is hype. And this is the evolution. So we started with AI is going to save the world. AI is not going to save the world, but again, that was the narrative. And then that transitioned into, oh, well, if AI is going to save the world, we're going to need all these GPU cards, graphic processing units. I think that's the chip, is the graphic processing unit. Of course, NVIDIA has not a lock, but clearly NVIDIA is the key player in that space. And so, NVIDIA stock, excuse me, heads off to the moon. And then, the next shift in the AI bubble narrative is that, oh, well, if AI is going to save the world, it's going to need a bunch of data to process, because that's large language models. That's how you train them, is you got a bunch of data and you train up your model and then you go apply it. And so anyway, in the third phase of the bubble, we're going to need all these new data centers. Oh man, we got to build data centers. And so, that was stage three. And then the next phase was, oh, well, if we're going to build all these data centers, clearly we're going to need a bunch of electricity to drive those data centers. And so that was part of the bubble. And where we're at right now, in my opinion, is the players, the serious players, i.e. they're really focused on AI and not just stock market bubbles. Hello, Wall Street. This is where we're at right now in the AI bubble. Oops, never mind. AI ain't going to save the world, folks. And so, in my opinion, part of what's going on right now in the AI bubble is people realizing, acknowledging that, well, maybe we got a little bit carried away. AI is not going to save the world. We don't need all those graphic processing units. We don't need all those data centers. So we don't need the electricity and just on and on. And so anyway, we're deflating the AI bubble as people get back in touch with reality. And of course, it's just Brian stating his opinion. Now, there is a legitimate business driver related to AI. And this was pointed out by one of my close associates. Every 2 to 3 years, American corporations refresh their computers. All the desktops. My background is in software development. And so you walk through a software development area, where software developers sit. Everybody's got a computer on their desk, at least one. And every 2 to 3 years, the corporations refresh those computers. And so there is a legitimate driver for AI in that during the next PC, personal computer, during the next PC refresh cycle, those corporations will be buying, almost certainly will be buying PCs that have AI technology as part of their setup. And so there is a legitimate driver in the AI space, but AI is not going to save the world. Let's see, we already looked at that. This is an interesting tool. It's Google Trends, and easy enough to find. Google Trends, and then you type in whatever term that you're interested in, and you see, is anybody else interested in that term? And so right now we're looking at AI bubble. That's the term that we're looking at in this chart, and we can see that the peak in searches. And so, you know, this is a count of how many people are, well, and it's not an actual count, it's a relative. Obviously, there's more than 100 people searching on the term AI bubble, but what we're seeing in this chart is the trend over time of people searching on this specific term. And we can see that back here on August 5th, that was a peak. And then it's tapered off significantly. So we'll see in the charts that we're going to look at, we'll see what happened on the 5th, or what the stocks did on the 5th. Why were people searching AI bubble on the 5th? But primarily that's just a tool to be aware of if you aren't already. This is the most interesting chart we're going to look at in this video, in my opinion. It is a chart that is showing us the strength of the technology sector relative to the overall stock market. Got that? Tech sector versus broad market, XLK over SPX. Just interesting to me. You may not find this interesting. Way back here in 1999, this is when I started getting interested in the financial markets. And of course, the dot-com bubble was blowing up to the moon. You know, they were counting eyes on screens, clicks. I mean, they were creating all these bogus metrics as a way of justifying the dot-com bubble, which of course burst dramatically. But anyway, what's interesting to me about this chart is there we are in 1999 with the dot-com bubble. And part of the narrative at that time is internet will change everything. Absolutely true. The internet has changed everything in the last 24 years, but it hasn't caused stocks to go to the moon. I mean, it just, the stocks were being priced as if the internet changing everything was going to drive all technology stocks to the moon. And that's, you know, that's bullshit. Let me just be blunt. That's bullshit. It's narrative. Well, interesting. Here we are in 2024, and the narrative is AI will change everything. Again, absolute truth. AI, there is definite value in AI. We can turn over a whole bunch of just tedious, repetitive work to AI. And of course, the downside of that is we don't need humans. You know, if AI, a whole bunch of jobs out there that AI can do satisfactorily, we don't need a human sitting in that chair, basically a waste of resources. And so, yes, AI is going to change everything. And one of the things it's going to do is put a whole bunch of human beings out of work. But the point in looking at this particular chart is just observing that, isn't it interesting, at this level is where the dot-com bubble burst. Big drop after the bubble burst. And here we are yet again, 24 years later, right back at the same point. AI is going to save the world and all the financial stocks are going to go to the moon. No. No. All right, let's keep rolling here. So this ETF, it's the Magnificent Seven. And so this ETF, equal weight exposure, Magnificent Seven, there's the stocks. A couple of interesting things about this ETF. One of them, what I'm showing in the highlight there, could be looked at as a island top, which is one of the I won't say that it's common, but it is one of the distinctive and fairly reliable reversal indicators. You get an island top, and quite often that's the top. And so anyway, and we'll see island tops in a number of these charts that we're going to be looking at. Bearish volume action. Look at that spike in volume. That was 11 July. Let's see, we were talking about August 5th. Where's August 5th? Oh, August 5th. Well, so it looks like on August 5th, and I'm thinking back to the Google trend, that people were either freaking out and saying, oh shit, is the AI bubble really going to save the world? Or after the stocks had already dropped way the hell down here, they were searching Google about the AI bubble. Will my AI stocks recover? Or did I just lose a buttload of money? So anyway, bearish volume action. This is the accumulation distribution indicator, which gives us some insight into whether investors are accumulating. You know, they're adding stocks to their portfolio and holding them, or are they bailing? They're thinning out their portfolios and selling stocks, and so that's primarily what we get, the value that we get out of accumulation distribution indicator. And what I see here is that very distinctive, that spike, that mountain, if you will. There's the bubble being blown. There's the bubble being deflated. So bubble pops. And clearly the bubble hasn't come back yet, which, you know, in my opinion, that's technology investors acknowledging that they got carried away, which I guess is better than being carried out on a stretcher. But anyway, Google in the daily time frame, all the stocks, all the charts we're going to look at in this video, their daily time frame. This is a good example of an island top. And so in the highlight here, you can see this big gap. So when stocks or any vehicle, doesn't matter what the financial vehicle is, you know, futures, option, you know, whatever, a breakaway gap is when the vehicle, the financial vehicle, is moving higher, and then you get a big gap to the upside. That's a breakaway gap. Price is breaking away from its previous action, basically taking on a new behavior. You know, we have this steady rise in price, and then bam, you know, it jumps up to a new level. So that's a breakaway gap. One of the signs of a gap, whether it's to the upside or the downside, is rising volume. Well, there it is. I mean, look at the volume on the breakaway gap, big volume on the breakaway gap. And then we get, you know, what's that, 2 months, 2.5 months of rising action. And then we get an exhaustion gap. And so an exhaustion gap is when everybody says, I'm tired of this, I'm going to go do something else, and they all bail. And they bail at the same time. And so you get an exhaustion gap. And again, one of the indicators that adds credence to the importance of a gap is rising volume. And so here again, we see when this exhaustion gap occurred, we get a big rise in volume. So island top, breakaway gap, exhaustion gap. Oh, that's interesting. So the markets are open. When I looked at this, when I was getting this video ready this morning, it looked like we were about to get a MACD crossover. And so I had intended to point out to you that MACD is very oversold, or fairly oversold. No, actually, it's very oversold based on MACD, but we're about to get a buy signal. But what I'm seeing right now is that ain't a buy signal. That's MACD headed lower. So anyway, interesting shift just in the last 2 hours or so. I think that's enough of me babbling about Google. Amazon of the stocks that we're going to look at, I think is probably looking the best, albeit this is another island top. There's the breakaway gap on a big spike in volume. There's the exhaustion gap on a big spike in volume. This volume action is bearish. Notice that price is rising, volume is dropping. That's exactly opposite of what we want to see if we are bullish on stocks or bullish on a particular stock. When price is rising, we want to see volume rising along with it. That ain't what's happening here, folks. Regardless of what stocks are doing, people are not participating. Mom and pop investors are not participating in the current rally, which in my cynical mind suggests that the markets are being manipulated. What we're seeing is not organic action. This is the corporations like Apple. At their last earnings call, they announced a stock buyback program of $110 billion. $110 billion. And so when the stock markets start to swoon, corporations, and Apple is not the only one, there are numerous corporations with significant stock buyback programs in place currently. When the markets start to swoon, that's when they jump in and buy stocks. And of course, that makes sense. You know, it's basically the stock's on sale, or that's one way of looking at it. The stocks are on sale. Let me jump in. I like buying things when they're discounted. And so the corporations jump in both feet buying stocks. The secondary, or maybe it's the primary reason they do that, is because they're trying to keep their stock from crashing. And so by buying back their own stock, they are creating demand. You could argue about whether that was organic or artificial demand, but anyway, creating demand for their stock so it doesn't crash. And so I suspect along the lines or the idea of manipulation, part of that is stock buybacks. That we got a lot of corporations stepping into the stock market, buying their own stocks back. Let's see, Apple in the daily time frame, volume falling, maybe a MACD buy signal coming, hasn't occurred yet, but perhaps a MACD buy signal. Energy elevated, bullish, you know, if you're a bull on stocks, you could certainly look at this chart and point out some bullish stuff. All three moving averages are in bullish alignment. 20s above the 50, the 50s above the 200, so on and so forth. Let's keep rolling. Meta, more of the same, bearish volume. Actually, bull mode in MACD and on a buy signal and elevated energy. So, you know, there are some positive indicators here. But that volume again is concerning. And I didn't highlight it here, but this just caught my eye. You know, there's another island top. There's the spike in volume on the runaway gap, breakaway gap. There's the spike in volume on the exhaustion gap. And so we could call that an island top, except that price has risen above that top. And so clearly that wasn't an island top, but I would suggest that is not healthy action, not healthy action in this particular stock. So let's keep rolling. Microsoft. Microsoft is another corporation, or it's one of the companies that could benefit from the corporate PC refresh cycle, because when a corporation, you know, they go buy 10,000 PCs and then they, you know, deliver those to the IT department and they make sure that, you know, the OS is up to date. And so anyway, selling a bunch of PCs means you're going to sell a whole bunch of Windows, Windows OS. And so reasonable that Microsoft is going to see some business in the upcoming PC refresh cycle. And notice that MACD very oversold, and we just got a buy signal. Looks like today, we're on a new buy signal for Microsoft today. Energy is elevated, but again, that is not bullish volume action. And so, red flag on the play. Don't get carried away being bullish about Microsoft. Wait for some volume to come in. That would be my suggestion. So here's NVIDIA in the daily time frame, oversold based on MACD, new buy signal. We actually got a new buy signal in NVIDIA yesterday and continuing today, energy elevated. Same thing with volume action, bearish volume action. Price yesterday pushed up through the top of this price channel and continuing today. Now running into the 50-day moving average, obviously, and currently pulled back from that level. Obviously, we'll have to overcome that resistance to head any higher. Let's see, Tesla, again, island top there. Big volume on the runaway gap. Spike in volume on the exhaustion gap, bearish volume action, MACD in bear mode on a sell signal. And instead of heading higher, look at the blue line there. It actually looks like it wants to roll over and head lower. So Tesla not looking all that great. So that's it. That's the Mag 7. And I think there's actually an 8th stock in there. But I'm pulling a blank on it. Let's take a quick look at the 3 indexes. S&P 500, obviously, in the daily time frame. Bearish volume. I mean, if you study technical analysis and you start looking at, okay, how do you validate a pattern? Head and shoulders top, island top, whatever the pattern is, quite often the validation comes from volume, or one of the validations comes from volume. And so that's why I'm emphasizing volume. This is not bullish volume action. And based on my understanding of technical analysis, that is significant. The fact that people are not participating, we're not getting broad participation in the current rally. It's counter trend rally. That's how I would describe it. So I was about to say, but it's not a rally. Technically, it is a rally. I would describe it as a counter trend rally. Primary trend at this point is to the downside in the stock markets, but we're getting a bounce and a strong bounce. This is a strong bounce, but the volume just isn't there, which is, that gives me more confidence to tell you this is, or to suggest to you, I can't tell you anything. That's like, is an old joke. I'm a Texan. You can always tell a Texan, but you can't tell them much. And so, because they're stubborn, they're not headed, it's like you can always tell a Texan, but you can't tell them much. And that's funny if you're from Texas, or know people who are from Texas. But so anyway, I can't tell you anything. All I can do is make suggestions, point out to you my perspective on financial markets, share with you my knowledge of technical analysis and how I apply it to charts. But so anyway, very oversold based on MACD a couple of days ago. We're rising off that oversold level. We've got a new MACD buy signal that's occurring today. Notice that we don't have the volume yet. Now, you know, maybe as soon as I'm done with this video, the markets are just going to explode higher and the volume's going to come in, and, you know, we'll be off to the race. You know, stock markets are going to go to the moon, Alice, to the moon. But, you know, trees don't grow to the sky, and stock markets don't go to the sky either. So anyway, I still maintain that the current target for the equity markets, in particular the S&P 500 and the Dow, is the 200-day moving average. That this counter trend rally is going to give up at some point. It's just tapped the 50-day moving average, and notice that currently we've got a doji candlestick, which, if you're looking for a top, dojis not uncommonly mark tops in price movements, and so potentially we're looking at a topping candle at the 50-day moving average. We'll see. I'd also point out in this this chart, this is a technical downtrend. Even with the counter trend rally that's currently going on, the primary trend right now is to the downside. So let's talk about what is the definition of a technical downtrend. Well, you get a high, and then you get a low, and then you get a lower high, and then you get a lower low. In my opinion, this will be, well, whether it occurs here or a little bit higher, we're headed into the next lower high, where stocks will roll over and head back down towards the 200-day moving average. Just Brian stating his opinion. Take it for what it's worth. And I ain't trying to sell you anything. I don't have anything to gain by trying to influence your opinion. I'm just sharing information, you know. The Dow, you know, very similar. We don't get volume in this particular index. Still headed for the 200-day moving average. Everything I just said about the S&P 500, we could say about this one, except notice that we don't have a buy signal yet in MACD. Still overbought, or excuse me, oversold, and in bear mode. So bearish based on MACD. Tech stocks, you know, obviously the AI bubble, that's where the strength has been, is in the tech stocks. So not surprising that the NASDAQ is stronger than the overall markets. Well, and that's what we looked at back here. I mean, clearly the tech sector is out of sync with the overall market. Is that sustainable? Maybe, maybe not. In my opinion, not. Well, and based on history, not. What more can I say? So anyway, oversold MACD, just got a buy signal, looks like today, still in bear mode, energy elevated. So, you know, keep running to the upside if it wants to. That comment about runaway gaps, that's relative to the downward movement, the bursting of the AI bubble, if you will. Pushed up through the 20-day, that's an obvious resistance level or support level. Hasn't made it to the 50, just kind of hanging out there for now. Not much to say. So that's all I got for you, folks. If anything, if you're going to take anything away from this video, I hope I've provided value. If you're going to take anything away from this video, I'd point you at this chart right here. Just think about, oh, isn't it interesting that back in 1999, the dot-com bubble relative to the overall market reached a certain level and then popped. And here we are 24 years later, the AI bubble has reached that same level and could be in in the process of popping or may have already popped. And obviously you'll have to decide which is the case. And maybe you think I'm full of doo-doo and don't know what I'm talking about. Albeit you probably wouldn't have sat through 30 minutes or so of me babbling if you didn't think I had at least an inkling of what I was talking about. So anyway, been fun chatting with folks. I'm going to end this video and I'll talk to you again soon.